Minisode 32 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everyone, before we get started today, I want to thank our sponsors. CME Group, Trading Technologies, RJO Futures, and Top Step Trader. Now today I spoke with Q Lahre, Director of Research and Development at StatFutures. Q is one of my favorite guests to chat about the ag markets. In today's show we discuss tariffs and trade wars with China and the impacts that may have on soybeans. Q explains what's happening with wheat in Russia and how that's similar to what's happened with Saudi Arabia and crude oil. We talked about Sybil, trade execution, timing of trades, AI, algos, and big data. And finally, we had a great discussion about traders taking time off. As usual, thank you all for listening, and please enjoy this episode. Q, welcome back to the show.
Thanks for having me on again, Anthony.
Well, it's great to have you back on the show, Q. I always enjoy our conversations together. It's been about a year since you were on Futures Radio Show, and obviously a lot's happened over the past year. And I follow you on Twitter and a few other ag traders to really find out what's impacting the markets that you trade, the ag space. Everyone knows I primarily focus on the S&Ps and interest rate markets and a little bit of cryptos these days. So I'm not really engaged in pricing and what's happening in your market, but I'm always interested to see what's happening in the ag space because not necessarily as a trader, but as a consumer. And, because obviously what happens in your markets impact all of us. So I think that it's very important to stay on top of it. And right now, what I've noticed through your Twitter stream and several others is tariffs and trade wars with China. And I've also noticed some talk about wheat and Russia have really been the main topics that have been discussed on Twitter. So I want to start off with tariffs and trade wars with China because this is really the talk of all markets, not just the ag space. And what's happening or what could be happening with tariffs and trade wars with China, you said to me is a real supply and demand story. So it's actually nice to see that fundamentals still matter in some markets. But I want to pick your brain a little bit, Q. Talk to us about what you see potentially happening with tariffs and trade wars. I mean, you know the stuff inside and out. What do you think is really going to happen? And also give us that worst case scenario that you think will happen if we do see tariffs and trade wars with China.
We had some big news breaking out. We took the market down pretty hard that one day when the announcement was made. But yet the market's recovered. It's rethought everything. And what we're seeing is that there's been no real, change in the supply demand at the back end. So what that means is that, China may not buy them from us, but the other rest of the world is going to be coming to buy them in the United States. And, basic supply demand is still at work. The main thing of interest is we've had 4 or 5 cargoes being sold to Argentina. So my thoughts are Argentina may be worse than people are thinking. So they may be dialing that number back in the beans for Argentina with the situation they had with the weather, this year. So at this stage, and just a quickie here, people talk about beans and the farm situation. It's running about 90 to $1 higher right now than it was last year when you and I talked. So for a trade war, beans being $1 higher, that's about all I got to say for the beans at this stage. But worst case scenario, Anthony, would be if the supply demand actually drops. So in other words, if China just says, instead of importing 2 billion bushels of beans, we're just going to do 1. and that will change all the equations. And so that's the worst case scenario. But if China's still going to buy 2 billion bushels of beans, someone's going to have to come to the United States. But we're going to sweep up the other rest of the business because there's only X amount of beans in the world anyway.
Okay, so the soybean market is the one that you believe is going to have the greatest impact with tariffs or trade wars with China, and that'll simply be because China decides to buy less soybeans from the U.S.?
Yes, well, just less total.
Less total.
Because if they start sweeping, if they buy, instead of 1 billion bushels in the States and 1 billion bushels in Brazil, they buy, 1.5 billion in Brazil and none in the States, then, that's going to change the equations. But, we're just not seeing it at the moment. We're going to know a lot more about when WASD comes out in about a week and a half. But, that's what I'm smelling inside the markets right now. And, the fact is, with beans, no beans sitting here at, 1040, 1050, that shows me that the market is absolutely not concerned about this game at the moment.
Gotcha. So Q, something I want to chat with you a little bit about is something that I do when I'm trading S&Ps or treasuries. Now, I primarily use technical analysis for my execution, but when I know a headline is imminent, I wait to see how the headline comes out and if it supports the current technical picture or contradicts the current technical picture. I use that as an edge for execution. For those of you out there that don't know what I mean, let me give a quick explanation. For example, if you're in a bullish market and you get a bullish headline, right, and we're day traders, you're flat. Now I'm going to be less picky with my buy signals and super picky with taking shorts, maybe not even taking shorts at all, because now we have a headline that supports the current trend of the market. And vice versa goes, if you have a bullish market with a bearish headline, I'm not going to be in a big hurry to buy right away because I know that a lot of people that have been long, based upon the way that the market has been trading, that you could see some of those people run out. So I'm going to be a little bit picky about waiting to buy, and maybe I throw out some bids really low in the market because they could possibly get hit as we run some stops, and maybe I'm a little bit more aggressive with my shorts during that time frame. So Q, knowing that you look at the soybean markets, both technically and fundamentally, what are the technicals telling you about these tariffs and trade wars with China? Are we looking for a best case scenario or a worst case scenario?
I think we're looking friendly. Okay. I'm not particularly bullish at this stage, and I'm certainly not neutral to these markets at this stage with the situation we've got out there in planting that's running a bit late. My frames, I run statistical frames, which show, basically the white lines of the road forward where the markets are going. Mine are setting at about 1.5 standard deviations above the mean, maybe 1 3/4 standard deviations above the mean. So certainly not out of frame, not even close to being out of frame. So, but yet it's above the mean. So, statistically, what I'm seeing is that the market has pretty much everything priced in, and I'm extremely comfortable with it. And I would say friendly, but cautious, because we have had a pretty stiff run in these beans, off that 990 low, a while back.
Okay, so knowing that these headlines are imminent, is this impacting anything you're doing with the execution of your strategies?
I tell you, Anthony, I've been around a long time, and as you have too, and I rarely get surprised. But when I saw Argentina coming across the tape buying beans, that really surprised me, to be honest. And that sort of got me confirmed. It's like, okay, now I get why the beans have bounced off, and they're ignoring this situation because it's really not too terribly concerned about this tariff at the moment. I mean, the only people who are concerned about the tariffs seem to be the people on the news outlets in New York City.
So it takes us back to what you and I both believe in, Q, is that we're market people. The market tells us the news before the news does. And when the headlines were coming out about these tariffs and trade wars with China, it was really just something for the algos to move this thing around.
Yes. From a statistical standpoint, the market is the answer. And, I use statistics to try to figure out within statistical probabilities of why the market is where it's at, and if the market is out of line. And from what I can tell, but by my numbers, and the beans are stiff, but yet nothing out of line. And it also coincides with the crush, because they've been crushing for meal. And when you crush for meal, you can't be short the bean complex. So it's got everything that confirms that it should be 1.5 to 2 standard deviations above the mean in my books.
I want to move on and talk a little bit about wheat, Russia, and crude oil. And I follow you on Twitter, as I already mentioned that, and a lot of other ag people on Twitter. And I've been seeing a lot of conversations about wheat, Russia, and also included in that conversation is crude oil. Now, I know the wheat markets, when I look at the chart, they've been flying around, but I really don't often see you guys talking about oil as well. So I don't know the whole story here, Q. So I'm coming to you for some answers here. Explain to us what's going on with the wheat markets, Russia, and why the oil market is included in that conversation.
Well, it's fascinating what we're seeing in wheat, especially out in the hard wheat areas, Kansas, Oklahoma, Texas. Due to the lower prices we've had the last 2, 3, 4 years, the last 2 years we planted less wheat at any point in time since World War I. And what that's done is it's exposed the market to some upside risk with quality problems and that sort of thing. But what it's also done is allowed Russia to continue to expand acreage out in the steppes, to continue to take market share from us, which is what we saw. And speaking of surprise numbers, Anthony, when they came out and said Russia had an 88 million ton crop last year in wheat, I almost fell off my chair. And that's a rare occasion that I get something dropped on me like that. But what that does is that means that all this wheat is sitting out there, halfway between Moscow and Beijing, and $10, $15 a ton freight advantage into China or into the Middle East, where the customers need the wheat. And we got a situation where the United States, even though we're dropping acreage, we are still losing market share, and the prices are still barely got a 5 in front of them. So the reason I mentioned crude oil is we're in the same situation Saudi Arabia is in, because they ran the price up in 08 to 140, 142, and U.S. opened up the shale fields and opened up all these other fields, and now we're virtually energy independent. We're exporting crude oil, we're exporting ethanol, and it's like who would have thought that 10 years ago? But Saudi Arabia and those guys are sitting in the same situation we are with wheat, which is that we're trying to get pricing, but we can't, because we got new competitors brought in who are really sticking it to us. And so that's why I look at crude oil and see what these guys are trying to do. And ironically enough, we take crude oil 35, 40 up into the 50, 60s, and that's about what we've done with wheat, from $4 to 5 and change. But yet, from here on up, that's going to be the real challenge, is to see what we can do with this thing. But from a political standpoint, it's mirrors of these two major, what I call echo structures, which was the Saudi, Iraq, Iran oil field stuff going on for decades, and all of a sudden the United States got around them, and the same way with wheat, which is where Russia and Argentina has gotten around us. So what this means, from a broad structure, means that the game is not about exports. The game is about cutting the cost of production, and forcing U.S. wheat into markets by price, not by politics. So this is going to be just a very, very interesting time to live in the next couple of years with wheat.
Very interesting stuff, Q. Thanks for that explanation. Now, same question I had for you when I was talking about technicals and beans and headlines I have for wheat. Was the wheat market technically showing us signs that it would bounce, or did the headlines spur the bounce and then the technicals caught up later?
I was noticing signals. I was bearish wheat for about 3 years, as you probably noticed on Twitter.
Yeah, I did.
And I got agnostic about wheat. As I started, it wasn't it was going to turn, but the pain was over, kind of a situation. But what I began to notice was that with the big wheat spreads, the commercials were locking in the storage. And, I spent my career starting at Pillsbury, and if we ever got anywhere close to full carrier, we could just load the boat in the bins and just carry it and then run everything else, as a pass through. That was our, golden banana that we were trying to always get at Pillsbury. And what that also means, Anthony, is that we got grain locked in, so you're gonna have to draw it out. And so what that was indicating to me that we had a situation where the downside was over, and we were looking for upside impetus. And we had a weaker dollar, we had some issues, down in Argentina. So it's really we've got situations where we're chewing away a little bit at the margins of the pain that was brought about from 2010, 2011. 2012, all the way into 2017. So we're beginning to chew through some of the stocks. They're still pretty substantial, but yet the market's getting used to them. And, that's a situation where we're at. And, we get situations with the rain and some lower proteins. We get a protein run like we did in Minneapolis last year. That gets everybody's blood flowing. And, that's why Sybil's always so dangerous, because, if you get a protein run in wheat and you're short, you better go to church, because you're going to get some religion. And, that's what happened in Minneapolis last year. And, we got a situation now where we've run wheat about $1, and people don't realize it. Wheat's rallied about $1. And, we're heading into harvest of all things. So, we're going to start cutting wheat in Texas. We're probably already starting, cutting the wheat down there. But, the wheat tour is coming in today out of Kansas. It looks like crap, especially in the Oklahoma Panhandle. So, it's going to continue to be, what we call antsy until we get a firm handle on what this crop is. And, they're saying 74 million tons out of Russia. Don't know if I believe that either, after what happened last year. So, I still wouldn't be surprised to see 80 million tons coming out of Russia. But, the real problem with that wheat is that it sits there, right on that one road thing out of China as part of that big structure we were talking about last year, where China's building out its supply chain and its supply chain architecture. So, we're not part of it because the supply chain doesn't run across the ocean. But, the rail and the trucks and everything else, it's going to get very, very interesting. And that's why I think we have to compete on price and not play the game of politics.
You mentioned Sybil a lot. Explain what Sybil is to everyone out there that doesn't know what it is.
Sorry about that. I thought everybody at Ag Twitter knows what Sybil is if you trade wheat. Sybil was a movie about a woman who had multiple personalities, and none of them were good. And it's like Sybil, as we call her, the wheat market can be, very quiet, and then all of a sudden just rip your face completely off. And then, it's either a protein run or somebody got short or something like that. And the reason Sybil is so dangerous is because wheat is human food. Wheat is very political. It's the second most political commodity in the world after crude oil. And it's grown everywhere. It's eaten everywhere. It's like 20 to 25% of the caloric intake of the human species. So, if we didn't have wheat, we'd have to replace 7 trillion calories a day.
Wow.
And it's just ridiculous how much, wheat's involved in the human species. Whereas, corn and beans are animal feed. So it's like they're second derivatives, but wheat is the first derivative. And that's why it really is exposed to, Putin, doing this or that. And, if we got into some politics about wheat, that's when things get really wild in the grain markets.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. Wow, very, very interesting. Some stats there I had no idea of. Very cool. Now, I want to go back to the execution a little bit and talk about how you noticed some things happening in wheat that basically you said, okay, we may not be going up now, but we're probably done going down. And that's something I always look forward to as a trader is like, okay, at least I know which way not to be right now. And so basically going back to that situation, do you notice that those markets like wheat, all of a sudden you see that change in trend, and then technically it's showing you something, but then the headlines trigger it? And I'm also wondering, like, how do you execute that? So for me, I know when I go back to my world of things that I'm trading, I feel like we're always early, Q. You know, it's like I see something on the technical side that I know is shifting or changing, but it's very hard to execute. And then all of a sudden, one day, a story or a headline comes out, and it takes the move all in the direction I've been trying to be in. And it's been hard to sit that way. Talk to us about that a little bit.
Well, the thing is that, even Warren Buffett said that, he pretty much knows that a company's undervalued. He just doesn't know when it's going to, take off after he's bought it. And, timing, in my opinion, if you got timing, you're golden, because I generally know where wheat's going. I just don't know when it's going to go. And it's sort of like, quantum mechanics. You either know the direction of the electron or you know its charge. And, same with wheat. I mean, you either know where it's going or you know when it's going to go. And, it's just an extremely difficult thing. And, I take a lot of heat because what I do is I'm a spread trader, as you know. And in my opinion, the spreads are always the first. They're the coal, what do they call it? Canaries in the coal mine. And spreads are always move first before. So you look for those little signals, what I call the little vibrations that happen. And, like May, July wheat that just, went from full carry to even money here in no time. That tells you that something is up. And because the spreaders are always the first one in. And then, the headlines are way, way late. But what they do is they confirm and generally put the money in our pockets and put the money in the bank, as you all know. So, that's the way I've seen things happen. And as a spread trader, I'm always looking for, what's the butterflies doing, the KC Chicago, the wheat corn, all that kind of stuff, to see if something is really up. And, that's where from my standpoint, it's all about physics. And if a market as big as wheat moves against corn, then we have some physics involved in that situation. And the key is to know the difference between the move in physics and simple market action, where we're just going back and forth, catching the orders. And that's where I think 2, 3, 4, 5 years of experience, you get a feel for where people are just doing market action versus they're making a statement. And especially in wheat, wheat spreads. I mean, wheat spreaders are famous for being some of the best in the business because you've got the three wheats. You've got the wheats inside Chicago, you've got the wheats inside Kansas City, but you also got the protein play, and then you got the feed play against corn. So it's extremely complex to be a wheat trader. And I don't think people really understand how complex it is. And plus, like we were just talking about a few minutes ago, you have to have a handle on all the politics because it's grown and eaten everywhere on the planet.
Thank you very much for that explanation. Very cool, very interesting stuff. Now, I want to give you some props. Last time we recorded was just about a year ago, and I asked you what was going to have the biggest impact on the ag space over the next year, and you told me AI. Well, it's been a year, and from what I read and the people I talk to in your space, you've been spot on. So you still have some strong thoughts on what's happening with big data, AI, and algo trading. Talk to us a little bit about that.
Yeah. AI is definitely taking over. I'm actually doing some work in it myself. The thing about AI is that it doesn't forget. It absorbs all data. And I think the algo guys, why we're seeing some struggles inside the funds and in the futures and everything else is because they are mathematicians, they are not traders. And what I mean by that is that, when you study like, linear algebra or optimization, it's really all about the objective function. What I mean by that is that there's a single objective, and everybody in math who studies math, we've all got the same degrees in math, et cetera, but it's really that they're all chasing the same objective, but the market is much more subtle and complex, just like we just discussed in wheat, which is, it's going to take half a lifetime, in my opinion, to get AI right about trading wheat or trading corn as successful as a human. And, when I think about this, and I'm seeing these funds struggling, and then I hear that they're all PhDs in math and stuff like that, and I got nothing against PhDs in math or stats. It's really that you've got to have this experience to drive AI to not the objective, but to the actual answer where we're going. And that's what I'm working on, is to try to get an AI that's less precise, but it's more subtle in what it's viewing. And I don't know if I'm going to be successful, but I'm going to give it a try. What the hell, right? And this is only the beginning. And what I'm going to recommend to anybody who's out there, watch AlphaGo on Netflix. It is amazing. It's going to scare the hell out of you.
Wow, I'll definitely have to check that out. But thanks for that insight. Last question for today. I put a tweet out the other day, and it got a good response. And I said, day trader doesn't mean you have to trade every day. I take a lot of time off, especially after good runs. And I said, a lot of times traders will have their worst runs after their best runs. And once I get on a good run and I give back roughly 20%, I take some time off. I said, I'm here to make money, not just to trade. And I wanted to talk to you about this, Q. You've been in the industry longer than me. I have a lot of respect for you and your trading. So I wanted to know what you think about this. Do you notice in your trading, after you go on a good run and you start to give some money back, that it benefits you to take time off? Do you ever take time off? And when I say time off, I know a lot of people are like, well, what does he do? Does he go golfing? Well, I do a lot of that, and we can joke about that a lot, but I do that in the afternoons. But I watch the market every day, even when I'm taking time off. I just feel it's important as a trader that, I spent all those years. I had the work ethic where I watched the market from the minute I woke up to the minute I went to bed. And even in the middle of the night when I'd wake up, I'd be looking at it on my phone. And that work ethic didn't really mean I was making more money. I felt that I needed to be able to not be in position, step back, learn patience, get a better perspective. So when I started to struggle, to be able to allow myself the time to figure it out and come back. And really, I've learned that by not trading at times has really been beneficial to me in my growth in longevity. So I just want to know what you think about that.
Yeah, I take a lot of time off, to be honest. And, my thoughts is that, if I'm on a wave, you can't get me away from the board. I mean, I just killed it in 1988. I mean, I was just so on the market. But what I did after that was I took 4 months off and went to Europe and had just a fabulous time. And, Europe, Greece, whatever, blah, blah, blah. It was a great time. My side passions, of course, as you know, are galaxies, which I read a great deal about. And I love ancient history. So I've been to pretty much all the major ancient history sites on the planet. And that's what I like to do to get away. And frankly, that's why I work so hard, making this money in the wheat pit so I can do stuff like that. As far as getting on runs and off runs, I always had a rule that if the first 3 trades were bad, I closed my book, gave my cards to my clerk, and went down to Series and just drank all day. And my theory is that a bar bill is much cheaper than a big hickey from trying to fight the markets. And when Sybil just changed her mind on occasion, and just got to figure out what she's thinking, because if you fight her, you're going to end up with a margin call. And to be honest, like in 1986, I killed it again. And I took 6 weeks off, went to Greece. So I spent 6 weeks in Greece. I had a big KC July SEP on at the time. I mean, nearly limit position. And I was sitting in Athens drinking coffee in the Syntagma Square, and all of a sudden Chernobyl blew up, and we just went to the moon. I made a fortune just sitting in Athens drinking coffee. So, it's one of those things where I'd love to take time off. Trading is my life. My life is not trading. It's how I make my living, and you get to meet some interesting people. But no, I totally agree with you. You're going to burn out because Sybil will kill you. Believe me. And when you see what's happening in the bond market, stock market this year, try to fight that thing. You're going to get some. Going to take a few years off your life. So I totally agree with that.
Yeah. No. Thanks for that insight, Q. And I just look back at my career. I'm coming up on 20 years that I've been trading independently. Over 20 years in the industry. And I've learned so much when I've been able to step back that it's allowed me to be in the industry this long. And I've learned so much about myself and my trading. And I really do believe that I've gained so much patience and better perspective about my strategy when I just sit back and watch it. And I said the other day in a Periscope, I said, if you can't afford to take one day off, then you should be taking a week off, and you're probably underfunded. Because I believe that you need to be able to watch the market. Just because you're not actively in a position every day doesn't mean you're not trading. You could actually be watching and in your mind, tweaking your strategy, understanding the flows of the market. That's just my 2 cents. I feel strongly about that. So
yeah, well, I totally agree. I mean, back in 1985, 86, I came out of the box on like the first day. Red May wheat was on the board. I did a huge Marsh May butterfly with the Koreans. Made a fortune on it. Got cocky. About 2-3 months after I took that off, I got into a huge old crop, new crop spread the wrong way. Had China running up my what. Nearly got taken out. I mean, I nearly was out of the board of trade on that one. And then I took 5-6 weeks off, came back and made a fortune in the March 1986 wheat deliveries. So it's just one of those things where you've got to get out, you've got to clear the mind and, see what the flow is, because, as a spread trader, I'm much more into the big picture of, what's going on in politics, what's going on in the markets, the spreads, the intermarkets, and everything else. A lot of the day traders that I see are way too focused on the bark of the trees and miss the whole forest. And, that's what spreaders have to do is to observe the forest and anticipate what's coming. And, what's going on the tree doesn't really matter. It's just noise to us. So, but what that allows me to do is to, step back. I can go, I would actually go, to Greece or to, Easter Island. I went with a big position on just because I was comfortable where I was at. It didn't matter what happened, as long as it wasn't old crop, new crop wheat. But, that's how I was traded. And, I've been to places where I can't even see what the markets were doing for like 8 days in a row. So it's, that's a real character builder if you're glued to your screen.
Well said, Q. Where can people find you on Twitter, and give us a website to check out?
You can always find me at StatFutures. I'm just raising hell on ag Twitter all the time, as you probably know. And for the time being, you can catch me at StatFutures.com.
Everybody, you absolutely have to follow Q on Twitter. He's definitely one of my favorites to follow in the ag space on Twitter, and to, of course, to speak with on Futures Radio Show. Q, thank you again so much for coming on Futures Radio Show.
Thanks for having me back. Good talking to you.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.